Welcome to our quarterly update. Today we're going to talk about volatility in the markets, how our default investment option Tasplan OnTrack manages this, and also some thoughts on the housing market. So markets have been volatile in October and November, as they often are. If you look at the Australian market over the last 12 months, it's down 4.8% excluding dividends. Once you add back dividends and franking credits, it's actually slightly positive. The US market has also been positive. So, sure, markets have varied, but this is well within what we would normally expect to see. The majority of our members share this view and have stuck with their growth allocation for the long term. Well, markets had looked expensive for a while, and we'd actually taken some profits by selling down shares over the last 6 months. It's always hard to know exactly what it is that causes a particular market fall, but the trade war has made investors nervous and is likely to be a cause of why markets have fallen at this particular time. Our default investment option, Tasplan OnTrack, is designed specifically to deal with market volatility. When you're younger, the investment option invests more into equities, which have higher long-term return expectations but are more volatile. This is okay because you have more time to recover from any market falls. Once you turn 50, the investment option moves more to less volatile assets to protect your balance as you approach retirement. This reduces investment risk over your working life. So the housing market in the big cities has continued to fade. House prices aren't falling as quickly, but the number of sales is reducing. The reason for this is that sellers are still expecting the price that they would have got a year ago, but buyers feel that prices should have fallen. At some point, sellers' expectations will adjust and we'll see house prices fall further. Another thing that we've seen is apartments that were bought off the plan a few years ago and have now reached the point of completion where buyers have to pay the rest of the money to receive the apartment. So a number of apartments have had quite high default rates at settlement, and there are a few reasons for this. One is Chinese investors were able to put down a deposit, say 3 years ago, and they are no longer able to get the rest of the money out of China to complete the sale due to changes in the rules by the Chinese government. Local investors have also found that banks are less willing to lend the money for off-the-plan apartments at this point in time. So they both come together to lead to default rates of, say, up to 25% on new apartment buildings and prices falling. On behalf of Tasplan, I'd like to wish you a safe and happy holiday season, and I look forward to seeing you again next year.